Hi everyone, Dan Farthing here from Riverview Portfolio. I just thought I would jump on because I recently did a presentation and also wrote a blog on our website, which I'll share the link to, in regards to business owners putting themselves first in terms of when they're looking at their numbers. And what that really means is in terms of getting an understanding of how much somebody needs to earn or what the business needs to do to be able to give you the level of income after tax that you need to live your life. Often when we speak to people, this is based on three levels that I see. Level one being the essentials. So we've all got bills to pay, that bare minimum that we need to be treading water. But let's be honest, does anybody just go to work, run their own business just to pay bills? Therefore, you come on to level two, which I see as the realistic number. So the realistic number being we've all got our weaknesses that we like to do. So whether that be holidays, whether that be meals out, whether that be sport, whether it be days out with the kids, whatever it might be, is that number that you need above the bill line effectively to know that you can do all of those things without being too concerned about doing it. And the final level then becomes what I class as the aspirational level. So what is the business capable of giving you or capable of doing? Or more importantly, what do you need to do to be able to achieve those things? So again, that might be the bigger house, the flashier car, the nicer holiday, whatever it might be. What is that target in terms of what you're looking to achieve? Often when I work through this with people, there's things that get missed, things that maybe not understanding how the sort of tax and stuff comes into it. So what I've done is I'm going to run through just some really, really simple slides that I've put together just to give you an idea of how I might look at the figures and how we help our clients in terms of trying to get an understanding of those to start building that plan out. So just bear with me just 1 second. What we'll do is let's say, do you come first when looking at your numbers? So typically, people that run a business, you'll be very familiar with maybe what a profit and loss looks like. So we often start with our sales or turnover that we achieve. We might have a cost of sales, so our cost of achieving that. So things like if you're a builder, it might be the materials that you buy. If it's something that you're selling online, like products, and again, it might be those initial product purchases that you buy along with delivery costs and things like that. Then therefore then gives you a gross profit. Percentage you're looking to achieve. So again, that's looking about pricing and what you need to do to make sure that you achieve that. You achieve a gross profit. You've got your overheads and your cost of running a business. And for this example, what I would class within an overhead as well. So base this on these figures or numbers I'm going to run through today based on a limited company. So a director of a limited company looking at what they need to earn. So within that overhead cost, you might have your salary. So that tax efficient amount that you put through that's a deductible expense within your business will form, again, part of your earnings within those figures. You then get your profit before tax. We all know, unfortunately, that we need to pay corporation tax, which is currently at 19%. And then we get our earnings after tax. So this might be, therefore, then our target that we work to in terms of what do we want available as dividends to be able to give us the earnings that we want to from our business. As I said, typically limited company, as a director shareholder, your income will be made up of an element of salary, an element of dividend to make up that total remuneration figure. So I said, when you look at this, this is typically therefore like a normal profit and loss that you might see at the end of the year, or if you're monitoring your figures more regularly, which we encourage people to do, you might see on a monthly or a quarterly basis. So what I would look to do is actually turn this upside down because of actually start with you. So what do you need to, what is that figure that you need to earn? And again, we know that dividends are taxable income. So this needs to be a figure that makes sure that you achieve that take home pay. So that amount that you actually see in your pocket, knowing that you can make provision for tax along the way. To be able to make that, we know that there's going to be tax. And again, one of the reasons why I go through this process with people is that this gives us a great starting point as an indicator of what we might need to do for provisions of company tax that somebody pays. Obviously, you'll be looking at ways to try to reduce that wherever possible in terms of things that you can put what I class above the line, so things that are tax deductible. But either way, we've still got to get to a figure if you want to achieve a certain level of income. Let's say by having a ballpark number to start with, and then monitoring it regularly with things like management accounts and regular sort of updates around things, I would always encourage people to look at it in this way so that they can then put away an element every month. So remember, the tax money, I describe it, whether it's the right description or not, is often, as a business owner, you're the middleman between consumer and the tax man. So you work as a bit of an agent to just pass that money on. So if you know what you're doing along the way, then again, when it comes to times when you actually need to pay tax, and when that tax liability comes, so again, for a limited company, typically 9 months, 1 day after your year end, then you're already in a position that you've got that money put aside and you know where you need to be with it. So stopping any nasty surprises. So it then gives you a profit before tax. I say you then got your costs of running the business. So overheads, I say they can be anything. So I say I would include within that number your salary element as a director, but maybe things like rent, maybe things like stationery, advertising, travel, things like that will go into making up that number. And again, depending on what your type of business is, it depends on how those fluctuate depending on what you're doing, and also the level of those as well. So we then get to a gross profit figure, which would be the profit before tax plus the overheads, gross profit percentage, so what you're trying to achieve by your sales. So I've used this on the basis of somebody that's got cost of sales. So you might not have that line there or focus on it if you're maybe a consultant, maybe selling your time for what you do. But it's an important thing to focus on in terms of pricing. So your cost of sales, your cost of delivering that. Then ultimately what that then drives is a sales target if we work through those figures. So I think this is really, really important. And I'll show on the next slide in terms of some numbers against this. Because of, as well as forming the foundation of what it is that you want to earn and what you would therefore need to do in terms of achieving that, it can also give you some focus or maybe some changes or things that you need to focus on to be able to hit some of these figures as well. As I said, if I go on to the next one, I've just used a basis of somebody wanting to achieve £40,000 worth of dividends from their business each year. By doing that, we already know that to achieve that, the corporation tax rate, corporation tax is going to be around that 9,383 sort of pounds, which will give you the profit before tax of just over 49,000. Okay, so those are just that earnings plus the tax to give you what you will be needing to achieve to make sure that you've got enough left to be able to take that home. I've worked on just a monthly basis this business that I've run through, cost them 4K a month to open the doors effectively in terms of their overheads, which therefore gives them a gross profit target of 97383. So again, it's just profit before tax plus the overheads. In this business, we've worked on the basis that they achieve a 40% gross profit. Okay, so if for every £100 that sale, they've got £60 of cost of sales to deliver that, and it gives them returns of £40 on every £100 that they make. So we can then start to generate, therefore, from that, what that cost of sales figure will be, and therefore what the sales figure needs to be able to achieve that level of gross profit in terms of what we're doing. So we get into a figure of just over 243,000 that this business would need to achieve to ultimately work back to that 40,000 that they need. Obviously, when you look at these numbers in isolation, you could go, well, they're scary. It could be things that you're looking to do in terms of tweaks and changes, but say this for me gives you a real basic starting point of what you need to achieve to be able to just achieve those sort of minimum numbers. As I said, obviously working through those levels, as I say, paying the bills, the realistic number, the ambitious or aspirational number that you're going to, all of these figures can be updated to therefore then reflect what you need to do. What we therefore often then find is it therefore then gives people bite-sized things that they can tackle. Okay, so it's a case of then going, well, what things can I get, and as I say, above the line? So what things are deductible, which maybe means that I don't need to take so much home. So it might be things like pension contributions that people might be paying personally. There may be other costs, insurances and stuff like that that are legitimate business expenses that can be added into that overhead figure. So again, reducing down that number. So that can be one way. What it can also do is it then starts to maybe quantify what you might need to achieve in terms of sales. So I think this is a really important one, is again, knowing maybe what your average sale value is. So, you know, what typically do your clients buy off of you, and what does that equate to give you a number of therefore that you need to achieve to be able to hit that overall target. Likewise, then that can feed into things like, how many leads do I need? Am I good at converting them? And then working through those figures to see those little improvements that you can make. And then likewise, it may be things around looking to see how you can improve that gross profit margin. So again, is that additional things that you can bolt onto things in terms of selling to your customers? It may also be looking at, is there value in bulk purchasing something to be able to bring the cost down? So again, those sorts of things then start to tie in with other things that you'll be looking at within your business and managing along stuff like cash flow as well. As I said, I just wanted to focus on this because I think this is a really, really basic starting point that I'd like to see a lot of businesses sort of work from. Often we deal with a lot of clients that they may have come out of employment. So again, when you're employed, again, whether my analogy is the right one, but you get paid, all your taxes sorted, and the challenge is making sure that that lasts until the next payday. As a business owner, you're now responsible for the taxes as well. So what does that mean you need to do to do it? And also it stops people maybe being busy fools. So again, when people start, it's very easy that if somebody wants to give you some money and they want you to work with them, to just take it and then maybe not look at things like profitability and stuff. So there may be things that you can do to improve some of those steps along the way. As I said, I have put a blog together that's on our website, and we'll include the link below so that you can go to that and have a look at what I said. But I just wanted to sort of jump on and say a little bit more information about how I would work through that and how I think it's a great starting point for some of that forecasting to improve what you're doing as a business, but also to make sure that your tax that will come, and tax does come from being successful, is planned for. You know what it is. There's no surprises, and you can work from there. So I hope you found that useful. If you've got any questions, please do feel free to drop me an email, give us a call, and I'll be happy to chat through this and go through that in more detail if that was something that you were after. So again, thanks for joining today, and please do leave your comments if that was useful. So that's Dan Farthing from Review Portfolio.